Good morning and welcome. And there's the bell. So, welcome this morning to Trader Talks in today's market. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. And I am joined by my good friend today, Brent Moores, out there in the chat. And welcome to all of you. Thank you for being here, whether you're here in the live session or whether you're in the recorded session. We appreciate you being here. Brent's 20 plus year veteran of the financial markets. He's there to help answer your questions along the way. And please do participate in the chat that's going on. That's your way of getting to be a part of this community. We appreciate you being here and being a part of that, whether you are watching in the recorded version or in the live version. And Brent has another way posted there of how you can reach us. That's at X, at Ben Watson CS, and Brent is at Brent Moores CS. We'd love to see you there as well. Hey, couple of quick things going on this morning as we get started. It is just before the Thanksgiving holiday. Relatives are perhaps starting to arrive. And that's always an interesting scenario, right? When you have relative comparisons. Now you start comparing yourself to your relatives, or maybe you don't. But we're going to talk about relative comparisons today. That's going to be our theme of the day, is relative strength. So let's take care of a couple of quick housekeeping items and we'll jump into this discussion this morning. Remember, everything we talk about simply is for illustrative and educational purposes only. It is not a recommendation. It is simply that discussion point, and it's not a piece of advice or any kind of a recommendation. Remember, if we talk about options today, options carry a high level of risk. They're not suitable for all investors. Be aware of the characteristics and risks of standardized options before considering any option strategy. Remember, the spread trading must be done on a margin account. Multiple leg option strategy involve multiple transaction costs. Remember that anytime that you're short an option, if it's American style, you could be assigned at any time up to expiration, regardless of whether it's in the money, at the money, out of the money. Now, that goes along with this next discussion, which is the fact that we're going to be talking about using the thinkorswim desktop software platform this morning, specifically the paperMoney version. paperMoney is not a guarantee of future success out there in the real world, but it is a great learning environment. It's a great playground for practicing, but it doesn't do things like facilitating the early assignment of short options. Now, that can happen in a live account, doesn't happen in paperMoney. So as you move your practice from paper to live, remember that that is a part of the things that you need to be aware of. Also, there are lots of different ways to look at the market. We're going to look at a couple of them today, including technical analysis. They are all theoretical in nature. None of them are guarantees, but because of that, Schwab doesn't recommend the use of technical analysis or any other form of analysis as a sole means of investment research. Remember, everything we talk about simply for illustrative and educational purposes, and nothing's guaranteed future results. Also, along the way, if we talk about things like stop orders or stop limit orders, remember that stop orders, stop limit orders don't guarantee an execution price, just an activation price. And if we look at things like futures contracts in this discussion today, those are not for trading. We're simply using those for analysis purposes. But remember, if you're going to trade futures, make sure that you are aware of the risks. They are highly leveraged products. They are not suitable for all investors, and they require separate trading authorization. So be aware of that if we do so and talk about some futures symbols in this discussion today. So here's kind of our general agenda, and then we'll jump into this. We're going to talk about the general trend of markets. We're going to talk about the trends of the sectors. Again, that relative strength idea. And we're going to look at trend, support and resistance, momentum that's going on. We'll put together some example illustrations in these discussions this morning as well. So I'm going to shift over to my thinkorswim desktop software platform. And as I do that, taking a look at this particular platform, remember that this is the paperMoney version, even though this says real. This is not a live account. This is a demonstration account for educational purposes only. I don't really have $16 billion of liquidity in a live account. I wish I did. I wouldn't be talking to you at the moment. But, there you go. All right. So when I do this, this is also a good opportunity for me to remind you to click on that subscribe button down at the bottom of the page. And that's going to keep you a part of this Trader Talks webcast community. It's a great subscription. Lets you set up alerts for new content and new recordings that come up. And it's at no cost to you. So speaking of relative strength, right? You know, your cousins might be showing up and you might be comparing yourself to them. So we're going to do a little comparison, a little bit of relative strength comparison here this morning. We're taking a look at the futures symbols for the major market indices as they have been moving over the course of today's trading. So starting at midnight, moving through this time frame. And the reason I say this is a relative comparison is because we can see where maybe some of that early strength is coming in. Now that the cash market has opened, starting to see the NASDAQ, that's that /NQ, making that move to the upside along with the S&P 500. What is changing a little bit here is the Russell has been pushing lower and the Dow has been pushing lower. So we've got kind of this relative disparity going on. You can see that NASDAQ's kind of knocking on the door of that top of the chart, maybe running into some of that chart resistance. I have to grab that label and kind of bring it back down here to keep it in the space. But, you know, this is a short-term view of what's going on in the market, not that longer-term trend. But this gives us kind of that sense of relative strength of the different areas of the market. So let's think about what's going on today that might be creating some of this relative strength disparity. And yeah, so request to share this particular chart. So I'm going to go ahead and do that. Now, that being said, anytime we share a chart or we share any kind of a script or anything else, remember that is simply for illustrative and educational purposes only. It is not guaranteed as to time or accuracy. Brett just covered me on that one as well, but there's the script right there for this particular chart. So let's think about what's going on in this discussion. So we have the FOMC minutes today coming out towards the end of the day from the last Fed meeting. So that's going to be potentially, and generally minutes are not necessarily a market mover because the information is already known, but it gives market participants an opportunity to kind of parse through the specific discussions that have gone on into that kind of decision-making process. So there might be some impact from those FOMC minutes. But overnight, what we're seeing that's maybe kind of driving this disparity is the promise, threat, challenge of new tariffs on specifically Canada and Mexico. We knew about the China tariffs. There's some more China tariffs being proposed as well, but that's having an impact on multinationals and to a certain extent, small caps, which are probably going to bear the brunt of some of those tariff implications, right? So we see the NASDAQ, which is primarily technology heavy. We see the S&P 500, which is the /ES, both of those kind of rising kind of up and away here. At the same time, we see the Dow, that's the /YM, which is multinationals, making a move to the downside. And we see the Russell 2000, which is typically small caps, and also regional banks, some financials, seeing that move to the downside. But small caps also contain companies which are probably less able to shoulder tariff impacts if input costs rise, and so passing those on to the consumer. So this might be that kind of early initial reaction. We'll see if this settles out this way. But right now we see a relative strength disparity or divergence between technology and kind of the broad market versus the Dow multinationals and the small caps, which is an interesting shift. You don't often see those multinationals and the Dow kind of move, or the multinationals and the Russell moving in conjunction with one another. That is kind of an interesting disparity here. Now, let's take a look here at a couple of other factors. I wanted to pop over here really quickly. I'm just going to go to my single grid for just a minute, because what I wanted to do in the single grid is I wanted to look at that relative strength disparity that's now been created behind that movement towards those tariffs. Nothing's been imposed yet. Nobody is in office yet. I mean, it's kind of that, well, okay, here's the expectation. And the reaction then is happening. So here's the US dollar, Canadian dollar spot currency pair. And so we can see the dollar. So this is Canadian dollars priced in US dollars, right? So we see that move to the upside. And that would suggest that the Canadian dollar getting weaker versus the US dollar. That's a typical function of that type of tariff impact, right? Weakening the Canadian dollar. Now, let's take a look really quickly here at the other impact, which is the US dollar Mexican peso spot currency pair. And we see that while the dollar's been strengthening against the peso, we see again another little bit of a move, although not quite as strong as that move against the Canadian dollar, the loonie here at this particular point. So currencies kind of on the move at the moment here as well. Now, here's what else we've got. If we come back over here to the Market Watch tab really quickly and we go to the calendar and we start to take a look at what's going on today, there's a bunch on the calendar, which makes up for the fact that this is going to be a holiday shortened week, right? So today in this mix, we've got things like new home sales. We've got 1, 2, 3, 4, 5 treasury auctions that are going on in different durations. We've got money supply information coming out. We've got FOMC minutes. We've got consumer confidence coming out here at the top of the hour. We've got new home sales coming out at the top of the hour. We've got Case-Shiller, which is out as well. So in addition to that, we've got, and let's just pop over here to consumer confidence. If we kind of come down here and we take a look at some of those reports here, we can click on those reports and we can kind of get a sense of what might be the expectation. Consumer confidence, we don't get an expectation. New home sales, we'll see what the previous was and what the expected is. And we're looking for a constriction or a contraction in new home sales. Yet at the same time, we see some of those home builders making that move to the upside. Again, another relative strength comparison that's going on here at the moment. We can kind of click our way through some of these. We can see changes in money supply, FOMC minutes, and kind of a quick synopsis of that helpful tool. But then on the earnings side, this is going to be, we're down towards kind of the tail end of earnings, right? And so that would suggest that we're down into some of the retailers, some of the small caps. We don't have a lot of the big names that are coming out with earnings, but we do have some that are in the mix here as well. So, one of the things to think about is as you start to think about earnings, we've got a lot of retailer earnings going on. Last night we had Kohl's and the announcement and their earnings call that their CEO is going to be stepping away. So Kohl's down about 7%. We also had Dick's Sporting Goods plus 7% roughly on earnings from last night. But let's see what we've got this morning. This morning, pre-market, we've got Best Buy, we've got Burlington, we've got Abercrombie and Fitch, we've got Macy's coming up this afternoon after the market. Today, we've got Dell, CrowdStrike. That's going to be a big one. Autodesk, HPQ, Nordstrom, Urban Outfitters, Amba, GES, and others that are going to be not necessarily overall market movers, but certainly market movers within their own right. So we can kind of pop down here and see what's coming up And the cool thing is, if we wanted to take a look, let's say, for instance, at CrowdStrike, you can go right to this. You can create an alert. You can see when that is, and you can kind of get a sense of where that excitement is building. So we'll take a look at some of those individual names here in just a minute. Now, a couple of other areas that I want to look at in terms of kind of these news topics, right? And seeing what's happening. I want to pop back over here to our charts. And before we get into some of these other individual areas, I want to just kind of take a look because we saw that disparity, that relative strength disparity happening. So I'm going to pop down here to my index grid. And some of you have seen this because I talk about this when I do regular webcasts and we talk about what's going on in the strength of the market. Is we see the S&P 500 up a little bit, but really at the moment kind of relatively flat, but RSI pushing a little bit higher here. Lower high in RSI relative to the last time that the index was up at this price. If we take a look at the NASDAQ, also seeing some of that strength here, relative strength, or the RSI in this particular case, that relative strength index, and we're at a slightly lower high on the RSI, but also pushing a little bit higher. And as we take a look, though, at the Russell 2000 in this particular case, that inside day or harami candle, if you are a Japanese candlestick aficionado, we start to see that little bit of a push to the downside in the RSI. All right. So that being the case, as we take a look at this, I want to get a sense also of what might be going on with volatility. So I'm going to pop over here to our VIX grid. We'll take a look at the VVIX and the VIX. So volatility dropping, volatility itself dropping, volatility bleeding down now into about the mid 14 handle, maybe trickling perhaps down into the high 13s, with the market moving relatively higher. That's not at all outside the realm of possibility. That also suggests that, hey, you know what? This is a holiday shortened week, but even though volatility is down overall, look at where it is relative to where it has been. Again, putting things into that kind of relative strength comparison. All right. Now, I want to break this down in terms of a little bit of that sector strength. So we kind of have that sense of what's going on in the market as a whole. Let's take a look at our sector strength here. And I've got a relative strength grid. I've got a couple of relative strength grids here. I'm going to take our SPX sector index grid, and we're just going to kind of walk through this. I want to do one thing first before we pop into this. The one that I want to pop into is this one, my relative strength comparison grid. You know, I know that this is a little bit of a spaghetti type chart. Those of you, if you were in Miami with us over the weekend at the Market Drive event, by the way, phenomenal event. Hopefully you had the opportunity to join us. We're going to be doing more of those next year. We've got an event coming up in Orlando next week where we're teaching technical analysis on Friday and option strategies on Saturday. We've got another one of those that'll close out the year in Houston later in December. But what's going on here is we see kind of that, again, relative strength of the sectors of the market. Here's technology, here's financials up here. That's that yellow line. We see utilities showing strength, which is really interesting given what interest rates have done, but utilities starting to tick back up again. Here's the SPX as a whole. That's the white line here, kind of right in the middle. Energy bleeding off a little bit. Healthcare starting to turn back up a little bit, but also we see a little bit of a push back down to the downside. So healthcare generally, since the election results, kind of falling off a little bit. Financials, technology, utilities, energy seeing some strength, even though energy is weakening a little bit. So the way that we get those labels to answer that question, that's a script. And those labels are scripted. And you know what? I'm generous. It's ahead of Thanksgiving. So I'm going to do this. I'm going to go ahead and share this one as well. And again, remember, these are for illustrative and educational purposes only. They are not guaranteed as to time. Whoops, that was the first one that I shared. Let me share this one again. I forgot to do that. This is the relative strength grid with labels. So there you go. Now you got that relative strength grid with labels, and you can see what's going on there. Now, the other thing I want to do is I want to pop back over here to one more grid. Let's just kind of walk through this relative strength scenario here. So we're just going to take a look at each one of these. We see energy falling off, right? And energy over the last couple of days making that move to the downside, although we see that the 50-period moving average still moving higher. We see materials gaining strength, but giving us a little bit of an inside day, but that's kind of an overall downward channel here. And we start to see industrials pushing a little bit higher. This almost looks like the beginning of a potential double top with maybe running into a little bit of a resistance up around this area. Don't know yet. It's not there in terms of that pattern yet, but we do see a little bit of a pullback here in those industrials. And one of the reasons, if we think about it from a relative strength perspective, why we might be seeing some relative strength change in industrials, well, if we've got higher tariffs, guess what? Those industrials, those durable goods, those are products that we sell to other countries as well. And so pushback is a bear sometimes, right? If we're going to put tariffs on their products, they're probably going to put competitive tariffs on our products, and it's going to make them more difficult to sell. Industrials go also into things like manufacturing. And so that tariff kind of saber rattling seemingly hitting those industrials a little bit this morning here. Consumer discretionary, though, that's the retailers, right? And that's the specialty retailers. That's the luxury retailers. And you could probably also argue that companies like Dick's Sporting Goods fall into this discretionary category as well, because you don't have to buy sporting goods like you have to buy soap and toilet paper and those types of things. Discretionary making that little bit of a push to the upside and making that move. So gaining a little bit of relative strength here. Consumer staples also seeing some strength at the moment, and kind of making this kind of broader pattern here, kind of right back up to some of those resistance levels. Let's take a look at healthcare. We talked a little bit about healthcare following the election. We saw a little bit of a relief, but then a move to the downside, now starting to perhaps gain back some strength, kind of in this butterfly pattern. So up and then down, and then we're right back up, tickling that level as what was a level of support, now acting potentially as a level of resistance. Financials continuing to kind of boom out of this big November 5th election gap to the upside, and maybe taking a little bit of a pause here today, but nonetheless showing a fair amount of relative strength comparatively. Now, what's interesting here, Infotech, which has been kind of the monster driver of the market for the most part over the course of this last year or 2 years, whenever, I mean, you know, in information technology in general, always the promise of the future, right? The market's future looking instrument. And so, you know, technology generally is that driver, but we're seeing a little bit of consolidation in technology at the moment. And a lot of people, BJ, are saying the same thing, right? Go big tech, because, well, think about a lot of portfolios being wrapped up into these Mag 7, these technology names, right? But we're seeing a little bit of a squeeze here going on, almost a little bit of a symmetrical triangle happening in big tech. And we're tickling the top of that symmetrical triangle in technology, the bottom of that triangle kind of described by that 50-period simple moving average in this particular case. Let's keep going with communication services, which is largely aligned with technology. And we see the same kind of thing happening, right? A bit of a squeeze going on. Not quite as close to the 50-period moving average in this particular case, but still kind of squeezing into those levels. And let me grab my magic marker just to kind of outline that so you can see what I'm talking about, in case you're not familiar with the terms that I'm using. So seeing that little bit of a symmetrical triangle squeeze right there and kind of getting into that squish. So at some point, you think about squeezing. Well, you can do this. I don't know how many of you have watermelon at your Thanksgiving table, but you could do this, I suppose, with cranberry out of the cranberry sauce. If you were to squeeze it between your thumb and your forefinger, at some point it's going to squirt out. It might hit your cousin in the eye, which might be okay because he's probably an annoying jerk. I don't know your cousin, but maybe he's okay. But here's the thing: when prices get squeezed, when levels get squeezed between levels of support and resistance, oftentimes you will see a pop in one direction or the other, and the potential is a move in the direction of the prevailing trend, but it doesn't always happen that way. So starting to see this kind of scenario building in this move, both in infotech and in communication services, into those symmetrical triangles. All right. So let's take a look here at utilities, also gaining back some strength. Utilities oftentimes moves as a yes, I did, as a consideration of what's going on with interest rates, which we're going to take a look at here in just a second. And we see real estate also continuing to make that move to the upside, gaining strength. A little bit of a pause, wait and see ahead of new home sales, I think, is this going to be the scenario, right? So Heather says, what's the implication of the symmetrical triangle? Is that generally the price is going to go one direction or the other. Generally, it goes in the direction of the prevailing trend. The trend coming in is going to be the same as the trend coming out, but that doesn't always happen. In intervention, things like tariffs, things like Fed cuts, things like that can change that perspective. News can change that implication. So the implication then is a pop in the direction of the prevailing trend, but it doesn't always work that way. So it could be a pop to the downside. Generally, it's going to be a pop one way or the other. And we finally come back down here to the SPX, so we can see what's going on there with the SPX. Now, I said we were going to take a look really quickly at some of the other influences here that are going on in the market. So I'm going to come back over. I'm going to pop back up into our single grid, and we're going to take a look at a couple of things again. So I'm going to take a look really quickly here at /CL again. Remember, we're not trading the futures contract. We're just using it as a measure of what's going on economically and data-wise. So here's an example of one of those symmetrical triangles. This is crude oil, right? We see crude kind of squeezing. What I have to do probably at this point is adjust the angles on this symmetrical triangle, which is okay. I mean, you can redraw your lines. As a technician, we redraw lines all the time. And so this becomes a little bit of a symmetrical triangle going on with crude, and it's kind of squeezing down into the middle of this pattern down here on this 68. So what that suggests is, with a prevailing trend coming in a downward direction, that we may see this push to the downside. Now, some technicians would argue that this is a symmetrical triangle. Some technicians would argue that this is maybe more of a descending triangle. Well, a descending triangle probably has a little bit more bearish implication as well, but we've got to see price crush down below that level. Now, at the same time, yeah, so we have geopolitical tensions easing a little bit, so that's going to drop some of that war premium potentially out of crude oil. We also have things like, again, promises of reduction in the length of time that it gets to push new permits for drilling on public lands. So something like /NG is going to be responsive to that. So that suggests that, hey, we're likely to see more exploration. So what's interesting is there's a relative strength disparity between natural gas and crude oil, right? Crude oil moving to the downside, oversupply. Crude oil or natural gas moving to the upside, which means that maybe a greater potential market for natural gas. And if we take a look at some of the companies that are involved in that, LNG, for instance, Cheniere, LNG, Cheniere Energy, seeing that move to the upside as well. So seeing that possibility. Now, if we take a look at what's also going on in that energy space, OXY, Oxy, right? Oops, let me do this. OXY, let's make sure we get the single symbol here. Oxy again, kind of pushing to the downside. So Riceberg, good question, because we might think that the drillers, right, the explorers, oil and gas exploration, um, might be beneficiaries of that, right? Lower regulations, greater potential, but boy, we're still seeing that push to the downside here in some of those. EOG, also one of those names, a little bit stronger than Oxy. Devon Energy, DVN, also moving to the downside, looking very much like that. Now, if we were to look at say, for instance, the large integrateds, ExxonMobil in the energy space, kind of flat but pushing lower, and then CVX, which I think also got a price target raise from an analyst. So the integrated's doing a little bit better at this particular point, seeing some of that strength here. So let's take a look also at interest rates really quickly, just to kind of get a sense. I'm going to pop over here. I've got a grid already built for interest rates. This is the 2-year, the short-term rate, and we can see the short-term rates falling a little bit. And a lot of this is coming. I think you see these last couple of days coming as a function of the potentially of the nominee to the Treasury, and that is benefiting perhaps the bond market, seeing bond prices rise, which would mean that yields are potentially falling. If we take a look at the longer term, we see again that push to the downside in the last couple of days. So this curve between the 10s and the 2s, if we were to just do this, 10s over 2s, so we do 10y minus /2yy, we'll just make a quick yield curve here. That yield curve's falling again a little bit. So not inverted, getting less inverted here at this particular point. So kind of sitting there at that point, right? So that's where we can maybe kind of look at that comparison. So interesting perspective in terms of yields. That's also perhaps what's benefiting utilities, and ought to be at some point, with seeing those rates fall, ought to be impacting those small caps. We see small caps falling a little bit today. So let's do this. Let's pop back over here. I'm going to take that back to my 10-year. You guys can build your own curve, but I'll just take this grid and we'll share this grid as well. Again, remember, these are for illustrative and educational purposes only, and they are not recommendations, but we'll pop that one in here as well. Not guaranteed for time or accuracy as well. And Carol, you're right. That also might be the reason why home builders are pushing down today as well. So what I wanted to do really quickly is kind of take again a look at some individual stocks in terms of that relative strength perspective. So I'm going to go back to my single grid, which is kind of my basic playground that we have been using here. And let's take a look at some of the individual names. So if we take a look at what's going on with analysts, right? So we can see analyst upgrades and downgrades. If we go to our Market Watch tab and we go to quotes, and we were to pop into something like one of the public watch lists, we can see analyst upgrades. We can go to lovers and losers. We can go here to analyst upgrades, and we can see some of the companies that have upgrades. We can see some of the companies that have downgrades if we change that watch list. But the one that I'm going to look at here is United Airlines. So we're going to go back to the chart. I'm going to go to UAL, showing an analyst upgrade on United Airlines, which is kind of following across the board in airlines. We see that UAL, Delta Airlines also making that move to the upside. ALK even making a little bit of a move, not quite as much. Hawaiian seeing that little bit of a pop to the upside. JBLU, JetBlue making a move to the downside, kind of breaking out of that little push. On the strength of the majors, oftentimes JetBlue, in terms of relative strength, will fall, and then LUV kind of in a weird place here, kind of going sideways. A little bit of delta neutral movement here right around that 32 mark or so in the airlines. One other thing I'm going to compare with the airlines, which is HO, which is heating oil. This is the proxy for jet fuel costs. And we see that climbing, again, out of that symmetrical triangle here, seeing that little bit of a pop to the upside. And depending on what your perspective is, seeing maybe a downside move or an upside move leading into that symmetrical triangle. Nevertheless, heating oil, as we get into winter time, typically tends to increase in price a little bit because there's greater demand. And so there's also greater jet fuel demand as flying picks up. If you've been on an airplane in the last week, you know what I'm talking about. And we see that push to the upside in heating oil, which is the proxy for jet fuel. Let's take a look at a couple of others here. One that's maybe seeing a little bit of a change here, Meta. We know that there's a lot of antitrust and FTC discussion going on here around Meta, as there has been around Google and around others. And we're starting to see, though, Meta pushing to the upside, even though they are facing a trial over their purchase of some of their social media apps, including Instagram, WhatsApp, and others. Let's take a look also where we're seeing some analyst upgrades, which is in the vacation hospitality space. Marriott seeing a little bit of a move to the upside. And let's take a look. Let's go back to our market watch grid. Let's change this to lovers and losers. And let's look at analyst downgrades and see where we are seeing some of those downgrades. Target, not surprisingly. Goldman Sachs, not surprisingly. A little bit of a drop in price target-wise or analyst rating-wise in Southwest Airlines. There we go. There's Southwest. But let's take a look at Target here really quickly and see what's going on with Target. You know, we saw obviously that earnings drop, a little bit of a bounce to the upside, and now a bit of a push to the downside. We might talk a little bit about that one today in our bear flag or our trading flag patterns webcast coming up in a little bit today, and we'll see if that plays itself out. Now, one other thing I wanted to do really quickly here before we get too close on time is I want to jump back over to our Market Watch tab. I wanted to come to one of the watch lists that I have, which is a dynamic watch list because it comes as a function of scan results. And that is stocks that are currently above their 200 period simple moving average, stocks that are above their 50 period simple moving average. And these are stocks in the S&P 500. So here are stocks in the S&P 500 that are currently above their 50 period simple moving average. Well, why does that matter? Well, again, it comes back to relative strength. These are relatively stronger than they have been over the last 50 days. And there you have technology and kind of technology / industrials in Tesla. You have Wells Fargo in the financial space. You have Dell certainly in the technology space. Workday, you have General Motors. Let's take a look really quickly here, Wells Fargo for just a second and see what that's looking like. So we're going to pop over, not yet, we're going to pop over here to charts and take a look at Wells Fargo, seeing that run to the upside, maybe a little bit of a pullback, right? Let's take a look at a couple of the others that are in that list, and then we'll talk about it. Tesla, in this particular case, we'll take a look at the chart for Tesla. Tesla kind of waffling around this range. We had looked at this as a potential bull flag breakout a couple of weeks ago. It is not yet. It's just kind of waffling there. And sometimes those breakouts don't happen. Let's go back to our watch list. Take a look at the next one on the list, which is General Motors. And again, more of that little bit of a pullback might be on its way to creating that either bear flag type of scenario or a potential head and shoulders type of reversal. Let's go back to the watch list here. Let's go to Dell. Let's take a look at Dell. And Dell seeing kind of that evening star type of pattern, up, and then down. Kind of that death or that sunset of an uptrend potential. Let's go back over to the Market Watch tab. Let's take a look at day, which is Dayforce. And again, starting to potentially see that move to the upside. So Heather asked the question, how did I find that? So I went over here to my scan and I built a scan, and here's what I'm looking for in this particular case. So this is the setup scan, and I can change it. But this is above the 200 period simple moving average, or I can make it above the 50 period simple moving average, I'm just scanning in stocks that are in the S&P 500 and intersecting with weekly options. So stocks that have liquidity in the option market, I want to see a minimum trading volume of 100,000 shares, and I want to see a last price above 60. So I'm looking for stocks that are not, $10 stocks. I'm looking for stocks that are in that $60 and up range. And then I've got a study on here. And again, this can be done in the live trading account or a demonstration account, not in a paperMoney account, because you can't use study. But I've got the moving average scan, basically showing that the close is at least 10% above the 50-period simple moving average. And I can change that simple move, that period here. If I wanted to make that the 30-period moving average, I can do that. And then I can click on scan, and we can run that list. And now what I'm seeing is a list of stocks that are above their, at least 10% above their 30-period moving average. So let's take a look at this one on the list. You might recognize this one, and that is Disney. And Disney kind of rolling up into a resistance level here. Nevertheless, it's above that moving average. So seeing that as a potential breakout. And what I'm going to look at doing here in this particular case, guys, we'll put on a trade example as we run into time here, is I'm going to right click and I'm going to buy custom in this particular case. And I'm going to do this. I'm going to buy custom with an OCO bracket. So what I'm going to do is I'm going to say, look, if price breaks above this resistance, we'll call it 116. We'll call it 116.50. We'll just call it 116.50. Where we're trading at right now, 116.16. So 116.50, we're going to make that a buy stop. Now remember, anytime we put a stop order on there, we specify the activation price, not the execution price. So if price goes above that, we're going to get in. And if it goes up to, in this particular case, up to that 123 resistance, then I want to get out. So I'm going to put in a limit order at 123, and we're going to call that good at our take profit level. And we're going to leave that as a limit order, but we're going to change the time in force to good till canceled. And then we're going to take a stop if price moves below that 116. So I'm going to say about 1% below. So that's going to put us right here at about 114. I'm going to make our stop right about 114. We'll call it 114.23, just for different math. And we're going to make that a stop. I'm going to make that good till canceled as well. And this is going to say, look, stop. Don't do anything unless price breaks below that level. But remember, again, we can only specify the activation price, not the execution price. So there's no guarantee at what price this will actually get filled. But what we're going to look at doing is taking that trade if the bus starts to move north, and if it goes south, we're going to get off quickly off of that bus. So I'm going to go ahead and we're going to click on confirm and send. I'm going to leave that good till day order here on the entry, because if it doesn't break through today, I may want to look at doing something else. And so I'm going to click on confirm and send. We're going to read through this order, make sure that it's what we want. I'm going to put this in my stocks group down here. And again, that alert, that reminder about those stops not being guarantees, and we're going to click on send. And some of you might be saying, hey, wait a second, why do I want to get out if it is higher? Or why do I want to get in if it's higher? I want to get in when it's giving me evidence. Guys, speaking of evidence, we have evidence of some relative strength going on today. My thanks again to the relative strength of our production staff. If you want to learn more, click on Trader Talks webcasts over here and search for the stuff that you want to search for. Lots of great resources there. My thanks to Brent Morris today. Again, click on subscribe if you haven't already, and we will see you guys later today in Trading Flag Patterns. Take care, everybody. Bye-bye.